So even before the Iran conflict, there was really major division on Wall Street over inflation, the pace of it, the direction of it. And despite the spike in crude oil prices, Morgan Stanley, though, sees inflation cooling. They do say the last mile could be bumpy, which is what it's been anyway. Meanwhile, Trueflation, which is a gauge I like a lot, you can see they're starting to rise here a little bit. But again, remember, their data well below what the Federal Reserve uses. Now, my next guest says inflation will likely top 4% this year. Economic growth will likely slow, but the negative economic impact should fade very quickly. So let's bring in FHN Financial Chief Economist Chris Lowe. All right, Chris, you actually also go on to say that you think because the global growth will slow down, it can have a significant influence on the U.S. in terms of disinflation.
Yeah, and that's more next year's story. Okay. This year, it's all about energy price increases, which I think after the war end will linger for a while because there's been so much damage to the infrastructure in the Gulf region. But that's what gets you to 4%. You're at 4% if gas prices stick where they are now for a few months. Beyond that, I'm worried about fertilizer pushing up food prices this summer and so on. But I do think it's important to think out to what happens next year.
So before we go to next year, this year, if let's say we stay at this level for another month or so, and then whatever things start to pull back a little bit, how does that hurt or mitigate the big, beautiful bill, all the benefits from that you've spoken positively about in the past?
Yeah, look, the economy's on a great footing going into this year. There's no question. If you look, for example, at the ISM indices, we've got the best performance by both the service and manufacturing sector year to date since 2022. But, you know, gasoline's a big part of the consumer basket. Right. I think that is a negative in the second quarter. That's when you're going to see the biggest pullback as people cut back on discretionary spending. But then beyond that, we are the biggest oil and gas producers in the world. It is generating a tremendous amount of income already. That income starts to be spent by Q3. So we're talking about, you know, sort of a one-quarter slowdown. And then on the other side of that, as we saw in 2022, when energy prices spiked, the economy actually accelerates.
I want to pick up on the consumer for a moment. Apollo put out a series of charts I thought were fantastic. They do talk about sentiment pulling back. But also, though, Redbook research, your same-store retail sales have been pretty steady, and they've been steady for a long time. Airport arrivals are starting to tick back up again, you know, notwithstanding what's happening with TSA. The resolve of the U.S. consumer, even with these higher gasoline prices, you still think it'll be there?
I think so. And then, you know, you also have to think about substitution. Energy prices overseas are much higher than they are here. And, you know, just to give you an example, natural gas trading on the exchange in Europe is 10 times what it is here in the U.S. Already we're hearing about people canceling on international travel because those ticket prices have gone up so much, right? Even if you're flying Delta, you're flying to London, they have to refuel over there to get the plane home. But that means we'll see people substitute domestic travel. We'll see more spending domestically than we will overseas because, again, those jet fuel prices are lower here.
So I love that. I mean, this is what people aren't talking about. Great point. So we're an exporter of oil. Higher oil prices at some point could be a positive for us. If people do more staycations, that's better for the domestic economy anyway.
Right.
So let's fast forward, come back to this week. The jobs report. The question is, Jay Powell, I think it was in that last Q&A, suggested that maybe we don't need any jobs, or that, you know, recently the job number has been zero. Yeah. And that maybe that's the magic number. We don't need any monthly job creation. I mean, you're not. What camp are you in?
No, I don't agree with that. I think Chris Waller has a much better finger on that pulse when he says, you know, zero job growth can't be good enough. There is still domestic population growth, working age. You know, people need jobs. People coming out of college are complaining about the difficulty finding jobs. And even in the New York City budget, they were complaining, not enough college kids coming into New York taking those high-paying internships leading to the Wall Street jobs.
Well,
they're not there.
They may be high-paying, but after the New York City taxes, you know.
Well, yeah, exactly. They're in Florida is where they are.
All right, so then this is the question, because I thought he was sort of ambiguous when it came to this look-through. The Federal Reserve historically being able to look through spikes in oil, spikes in these kind of things, not necessarily adjust policy so much that by the time policy, let's say higher rates kick in, that oil thing might be a thing in the past. Where do you see Fed policy going?
I think the market has a pretty good finger on this pulse. And while they do have a small chance of a rate hike priced in, it's like 25%.
But no one wants to hike rates, really.
No, they don't.
Waller was close to dissenting.
No, and they won't.
Right.
They won't, I don't think. I think rates are on hold this year. But now look at the other central banks around the world. BOJ already tightening, says they have to tighten faster. There are 3 rate hikes priced into the UK, 3 in Europe. That's recessionary levels of rate hikes when you consider those economies are barely growing.
Right.
And that's where I think we get the disinflationary impulse later. If the rest of the world tightens enough to significantly slow growth globally, then that frees up goods and services for sale here at a lower price. So again, you get that disinflationary impulse after the energy inflation comes through.
Good stuff. Great stuff, really great stuff, Chris. Always appreciate you, man.